Everyone ready? Okay. Good afternoon, everybody. Welcome to the panel on modern monetary policy, full employment, stable prices, and economic growth. Sounds easy. It's a dry subject. Judging by the number of people in the room, I can tell it's a dry subject. I don't think I can make it any more exciting unless you're a bond trader. But it's very, very important, especially for Uzbekistan. I think that if you had a market-based economy, all the structural reforms have long since been passed and tested, and you have a deep and liquid market and a private sector that is a significant part of the GDP, then the central bank's role, the government's role, is to get out of the way and let the private sector do its work. And the central bank's role is, of course, to just apply the brakes or put the gas based on what the market is communicating. There's plenty of market mechanisms and signals. But in the case of Uzbekistan, it's a different picture. You are the market. The mechanisms aren't there. They're being built. Fiscally and in terms of structural reform, for lack of a better word, there's been a big bang, and that puts a very different backdrop. And so I think while this topic is a very dry topic, it's extremely important because the institutions, the government in Uzbekistan are very important to the future, unlike in the exemplary economy where the government gets out of the way. I think here it will make a big difference for the future of the country. You're in a very particularly important period where government institutions matter very, very much. So with that, I'll make a few comments. We'll introduce the speakers, and we'll kick it off. The word modern is in the title, and it conjures up the playbooks in the central bank's toolkit, quantitative easing and intervention and so on. And I don't know how relevant that is in this topic. I think that, you know, Uzbekistan is an emerging market. It's prone to shocks, financial contagion within the banking system, external shock, no question, from the macroeconomic cycle, geopolitical risks, and you know, what the big economies are doing in the commodity market. A small move by a large economy can have a big effect here. So I don't know how technical we're going to get about monetary policy, but that depends on our panelists. The central bank needs to make the economy resilient to all these risks while also aiming for sustainable growth and stable pricing in a typical mandate. But as I said, the financial system is under development. You're building the ship while you sail it. And so this discussion may move in different directions depending on the panelists. So we need to understand the mandate of the central bank. We need to understand the tools and the transmission mechanisms that it can avail itself of to achieve its objectives. But the central bank is also a lender of last resort. It's a regulator of the banking system. And so it has a duty and a role in making sure that prudent lending, prudent credit underwriting is practiced, and capital management, and including, you know, how the banking system and their customers are exposed to FX mismatches, for example. So the central bank is an extremely important institution for the country especially in a time like this. Often panels like this get together and they all talk about what the central bank needs to do, shouldn't do. But today, the central bank is sitting on the panel. So there's some significance to that. And they will probably let us know what they want to do in a week's time. And so we can rely on the fact that they must create rational expectations among the economic actors. So I think we can count on some good discussion with the central bank in our presence. It's a good opportunity to communicate what you wish to communicate. And of course, we'll have some Q&A. So with that, I'd like for each of the panelists, I think I'm lucky that I don't need to introduce panelists because they don't need an introduction. I think it's best if we just go around and you just introduce yourself, name your institution. Like I said, probably you don't need an introduction. Instead of going into your background, which that's up to you, maybe present your perspective sitting on this panel, what you might feel is an important topic that you want to make sure the audience hears or learns about. In other words, your angle in sitting here, and maybe just give it a minute or two. Keep it brief. Let's start. Umid, you want to start, and we'll go around.
Yeah, thank you very much, Alfredo. Okay, my name is Umid Abid Khajaif. I serve as director at the Institute for Macroeconomic and Regional Studies. So mainly we conduct research on issues related to inflation, regional economic development, and similar topics. Okay, I think that's brief enough. Thank you very much.
Good evening, everybody. Atabek Nazirov, advisor to the Minister of Investments, Industry and Trade. I'm also CEO of Uzbekistan Direct Investment Fund. Thank you for inviting and having me today. It is, in my view, an extremely relevant topic that you're raising today. I personally feel, passionate about this because I believe monetary policy, the way it's been developing globally over the last, 40 or 50 years, has made, substantial impact on how economies are growing and how wealth is distributed and how people make their living. So I'm excited to contribute to the session and looking forward to hear members of that panel and take questions. Thank you very much.
Good afternoon, everyone. I'm Antonio Somma. I'm a partner with White Shield. We do public policy advisory and strategy. And let me announce my position on what we will be discussing today. My position is that there is a balancing act to be played between the role of the central bank, whose mandate is to tame inflation and keep it in check, and the role of the government to intervene with fiscal policy and with other reforms in terms of helping in a focused manner those groups of stakeholders which are the most vulnerable to a tight or non-tight monetary policy. For example, small, medium enterprises. Thank you.
Good afternoon, dear colleagues and participants of the second Tashkent Investment Forum. My name is Behzad Khamraev. I am Deputy Chairman, Central Bank of Uzbekistan. I am more responsible for monetary policy issues, research, and money and exchange market issues. I would like to say a few words about today's topic. The topic's panel is very interesting, as well as requires to clarify the usage of modern monetary policy theory in practice. As we know, the monetary policy approach differs between advanced economies and emerging markets. Advanced economies with a lack of room for conventional monetary policy instruments, lower inflation, and stable economic growth and low unemployment rate, they had to use some liquidity providing pressures through quantity easing or other types of asset purchasing programs. However, emerging markets such as Uzbekistan have enough room on traditional monetary policy instruments, experience high inflation and high economic growth. Under such conditions, central banks should tighten their monetary policy conditions to decrease the inflation, stabilize the price, and prepare the economy for long-term inclusive real growth. It's very important. Using instrument, monetary policy or fiscal policy, it is easy to reach some short-term economic growth. But to reach long-term inclusive economic growth, it's very important keeping the price stability in the country. I believe, of course, some of countries try to push using the easiest instruments, but never central banks forgot about economic growth. Of course, they have might be only a single mandate, price stability, but every central bank thinking about macroeconomic stability, economic growth, and employment rate, others. So, central banks, our central bank is accomplishing balanced monetary policy and trying to curb the high inflation without harming to the economic growth. I am happy to share with you our experience and our measurements, which we are providing last 4 or 5 years. Thank you very much.
Good day, dear participants. My name is Shahruh Hakimov. I am first deputy chairman of Tenge Bank. Just briefly explain what is Tenge Bank at the moment. So Tenge Bank is a 100% subsidiary of Halyk Bank, head and member of Halyk Group, which is the largest financial group in Central Asia, with a diversified network and representation in various areas of financial markets. Tenge Bank is operating on the Uzbek market, started as a greenfield in 2019, and is positioned as a universal bank, which is working with all types of customers, clients, so corporates, SME, population. Concerning today's topic, I may say that policy implementation of policies oriented on first of all guaranteeing stability, and besides that, so boosting economic growth is very important for both banks, financial institutions, and foreign investors as well, because investors are first of all orienting on fast developing markets, and at the same time to the stable environment in which they may operate. So I would say that Halyk Bank 4 years ago has chosen one of the priorities, establishing and developing its presence on Uzbek market, and I may say that this interest and this priority is still not only alive, but it's also growing. Just one example. Bank have come here 4 years ago, and I may say that, for example, Halyk itself, directly working from Kazakhstan, has financed a substantial number of projects in Uzbekistan. Plus, they have invested into the establishment of a full-fledged universal bank here. Last year, they've also registered first telecom subsidiary here, which will work and operate with cloud technologies. This year, we are expecting that one of our, I would say, sister companies will also join this market from the point of, with the operations establishing a marketplace in Uzbekistan. I've been just recently launched it, and Halyk Fin Service, which is company which is operating in Kazakhstan's fintech market, is also going to enter into the Uzbek market. Therefore, I would say that the topic of government policies directed on providing stability, curbing inflation, and also boosting economic growth is a very, very hot topic for which we are discussing with our colleagues in the headquarters. Therefore, I also was quite eager when I've been invited to join this roundtable. Thank you.
Thank you very much. Okay, well, I think in terms of format, we're going to lead up to a presentation from the central bank. And maybe the right natural progression. I hear stability, price stability. Stability is obviously a very key word these days. And that depends on dynamics. In the long run, everything is stable. We're dead. But in the short term, there's dynamics that you might. I'm not sure who made the comment, but it's very tricky to maintain price stability. There's an elasticity you can look at, and it tells you, oh, this will be the market response, the economic response to a policy input, and you do that in steady state, or you use a simple model. The dynamics are much more complex. So I think everybody is worried about stability because they understand the dynamics are complex. But so to start, what I'd like to do is just sort of get an idea of how divergent the panel is on the macroeconomic background, on inflation and growth. And ironically, this question is for everyone but Mr. Hamraev. It's basically, we just had a panel discussion this morning questioning whether the US or other major economies are in a recession or will be in a recession. Inflation seems to be persistent. There's a concern that we may be entering a stagflationary environment. But there are other camps out there, including the bond market, that says this has all been supply shock, head fake, and the result of massive but very temporary fiscal stimulus. That stimulus has run out, and if you look at wages and you look at the work week and you multiply them together, you don't see quite the same employment picture in the US and in the major economies. And after a very significant amount of credit expansion, not to mention debt ceiling concerns, that actually we're heading for a deleveraging cycle, and that's disinflationary or deflationary. So, and also to consider is the China reopening. Is that going to export disinflation to the world like it has for many, many years in the past? Data points are showing that it's firing on all cylinders again. You look at the dry bulk market, you look at tanker carriers, and they're importing record amounts of feedstock. It is indicating there's a potential for disinflationary export out of that engine. And the whole world relied on it for decades. Is it coming back? So the Fed meets next week. They're in a blackout period, but their comment has been that they're going to keep rates high, maybe not at the same peak, but they're going to maintain, the market's saying there's a near 100% chance at another 25 BP, and they're going to keep a tight policy for quite a long time. And some camps think that's going to create a deflationary cycle. So the relevance to the panel, of course, is that, if major central banks continue to have restrictive policy, and that reduces global liquidity, it's going to adversely affect emerging markets, and you're going to have to contend with that. So it'd be nice if the major markets started a loosening or a neutral policy, but if they continue to be restrictive, you're going to be in a tough operating environment. So with that, I'd like to know from the panelists, what camp are you in terms of the inflation, stagflation, or deflation? And I probably start with Umid, since you are in the business of macroeconomic forecasting. You could just say what camp you're in, or you could give a reasoned opinion, but is inflation, are we disinflating? And therefore, what this is leading to is is our individual opinions on what monetary policy is going to look like at the central bank in the near term. But from an inflation point of view, from a backdrop, macroeconomic backdrop.
Okay, thank you very much, Alfredo. You mentioned lots of things.
Yeah.
In terms of camps, I think, if there is a gardener and there is a garden, and we cannot say kind of clearly that the garden is growing only solely due to the efforts of the gardener. Yes, so there is a different aspect. So I think it will be difficult to say exactly in this or that camp. But yes, you're right. There is a global inflation, and then we have these contractionary policies. And I think, for example, the case with Silicon Valley Bank, for example, maybe this is one of the first implications of that, where you have to think not only about the inflation, but also the financial stability side of the issue. And we're all observing the capital inflow and outflow issues, and that, of course, signals the importance of developing, paying further attention to the local capital market as well, developing domestic capital market, and hence and so forth. But about the inflationary part, if we will look at case of Uzbekistan, then we can decompose it into, let's say, 3 parts. And we can say that 70% of the CPI change in Uzbekistan can be explained by non-monetary factors, maybe like 70%. It's imported inflation, 38%, supply shocks, 33%, and demand factors account for the remaining 29% of the inflation. Within that CPI, maybe 73% can be explained by 19% products, and mainly it's food products. And if we go even deeper into that, for example, we can look at sugar, yes, which is imported from Brazil. And if in 2021, I have prices here, 1 ton of sugar came from Brazil to the territory of Uzbekistan was 551 USD. Last year, December, it was 662. So clearly, we have this case of imported inflation. So as you mentioned, it's a global inflation's impact. The transportation cost, and there is, of course, the risk of technological fragmentation. It's also going to cost, and the transportation cost. And then we see the, for example, response by the CEOs of a wide range of companies. I think it was a PwC survey where they are planning on nearshoring, because now it's not only about the price or the cost, but it's also about what was the word? Resilience, a stable supply of the product. And I think at the end of the day, it's also going to translate into higher costs, because it's not only about where you can get it cheap, but where you can get it with a guarantee. So
they'll pay a premium for it.
Yes,
yeah.
It will be like a transaction cost, just like with COVID, where we have to always pass this test before going to some countries. It will affect. And of course, what we can do, I want to touch upon some measures which have been done in Uzbekistan, some permanent, some temporary. From the tax reduction side, VAT was cut from 20 to 15%, then further to 12%. One aspect, then 114 types of licenses and permits which were required, they were abolished. And 33 types, they turned into the notification. So I think this is going to reduce also the transaction cost. It's going to increase the number of entrepreneurs, which actually doubled for the last 5 years. And we know there is a correlation between the number of entrepreneurs and the inflation. And when there is a high concentration, when there is Herfindahl-Hirschman index is demonstrating there is a highly concentrated market, we know it accelerates outside shocks for the inflationary, because there is a lack of competition. So in that sense, I think it is important. And some temporary measures, as I mentioned, 73% explained by food products. There is import duties on 55 types of basic food, and 4 types of non-food products have been reduced to 0 in Uzbekistan until January 1st, 2024. This is very important because we know that inflation is kind of a tax for the poor. It's kind of this kind of notion. When in Uzbekistan there is a strong policy directed to the eradication and reducing the poverty, and in that sense, it's becoming important. Okay, what are the other ways to reduce it from non-monetary factors? One is, again, competition. Yes, as I mentioned, improving the competitions and focusing on sector by sector Herfindahl-Hirschman index, and we've done some analysis related to cement production, which is required for construction industry, and construction is important for the urbanization, and by urbanization you have less spending on necessary infrastructure, and this can help to reduce the government deficit, because now some of it related with the government investment program. And of course, there are some other aspect issues, but maybe I will keep it short for now.
Yeah, we'll be able to come back because we're going to talk about slack in the economy here, if there is any. But view on globally now, this is the external forces on the country. Are you going to be importing inflation? Are you in the inflation, stagflation, or deflation camp?
You know, referring to kind of global dynamics, if we put into perspective, let's say the Fed's, US Fed and major central banks around the world, the way they handled, let's say, post-financial crisis period with quantitative easing programs and printing, as they say it, trillions of dollars or other currency, I think Fed increases balance sheet at least 3 times, by 3 times. And look at the consequences of what happened post-COVID. The Fed and central banks did not print as much money as they did during post-financial crisis. So that, I think, at least led me to believe the money that was issued, it was absorbed by not Main Street, as they say, but by the Wall Street.
Something's going to inflate, either financial assets or...
Exactly, exactly. But the inflation globally, I think, has been increased significantly, as we observed last year in the United States, right? And that kind of shows me that the roots of the inflation that we're experiencing today, they are what we call them cost side of the inflation. It sort of impacted logistics, it impacted supply chain, and it made goods more expensive. So the production of anything, exporting grain from Russia and Ukraine, manufacturing of cars, supply chain, all the things have been impacted. So in my view, what today we're experiencing is actually disruption in global production processes is the main reason that we experience. So we're importing that inflation today also to Uzbekistan because we have a trade deficit. We obviously, a lot of goods are priced in dollars still. Even in Uzbekistan, when people, for example, sell apartments or houses or other things, they still quote everything in dollars. So we depend on what's happening with the import prices, what's happening with the dollar. Therefore, I'm afraid that this will probably continue, and I am not sure how much power central bank will have to fight that to be able to, maintain stability of prices when a lot of the actors are external. And we know that we have done, we've borrowed substantially in US dollars. Most of our debt in this country, external debt, is dollar denominated, dollar owned. And we see what is happening also now with the cost of dollar. It's unfortunately, I'm a pessimist when it comes to the outlook, but I think there are ways to fight that off. So to sum it up, I don't want to take up the whole conversation. I think we're in a period where the inflation is, in my view, is globally probably will have to be dealt not by central banks, but by other policies. And we cannot exclude, geopolitics and regional dynamics that are taking place, in Europe, confrontation with different actors, people looking at the different trade routes. If you want to, let's say, ship a container 5 years ago from, let's say, Brazil or United States to Uzbekistan, it would cost you 2-3 times less than it costs you today.
I know.
Just one example. And
although it's coming down a little bit, it ballooned. It was insane. Yeah.
So that's my view. I'll pause here,
Sure.
but I'll be happy to continue the conversation.
Sure. Antonio?
Okay, Dino, you asked a question, which is which camps we are in. So I'm in the camp of high inflation for a while, which will have to be managed. And I don't want to add to what other speakers have said before me, but let me build on that. Point number one, during COVID, for several reasons, there's been a lot of money has been pumped into the system. Trillions were mentioned. That money is still in the system, that liquidity. And it's still in the system, but will have to be returned at some point, possibly.
The Fed doesn't have any capital constraint, so it can sit on it for a long time. But yes, it's on their balance sheet.
Yes. But what that means is that there is another further dimension to that, which is the financial risk, which is somewhere in the system. Some people will return that money, some people will not. Some people will return it much later than they should have. And this only adds to the pressure. Point number two, going now to more specifically to Central Asia and Uzbekistan, imported inflation. In addition to this, may I call it helicopter money that has been pumped? Not only, I'm not speaking Uzbekistan, but in general, it's helicopter money. Imported inflation is twice more impactful, especially in a country like Uzbekistan, because not only does Uzbekistan import value-added goods, which add to the price of the commodity, add also the price of the value-added, which increases itself. So it's twice that price. But Uzbekistan also, let me remind to myself and to the audience, is one of the two double landlocked countries in the world. The other one is Liechtenstein, just for the records. And transportation costs, in a world where transportation costs have increases even more for a country's needs to overcome more barriers than others. The other aspect is that when inflation is imported, today it's imported also on commodities. Commodities in principle would be supply-demand, so easy game.
By definition.
Right,
yeah.
Wrong, because in addition to that is the shocks to the supply chains of commodities. And one example is very recent here in Uzbekistan, the import of gas, which was disrupted no later than January this year, which adds to the inflation, and it adds even to the availability of the commodity themselves. So yes, I'm in the camp of high inflation for a while, and therefore maybe in the rest of the panel, then we
Sure.
will discuss about what to do about that, how to tame it, and how to tame it in a way that doesn't impact adversely the growth for the longer term.
We're going to skip over you and come back, and you're going to present holistically. You don't have the luxury of giving a point forecast. You have to give a reasoned presentation. So, do you care to make a guess as to what camp, inflation, deflation, or stagflation, some combination, the external factor?
Just actually previous event here in this hall, they've been discussing the situation of the global recession, and representatives from international financial institutions, local policymakers have been discussing this issue. So I would say that all that details and factors and arguments have been discussed concerning inflation, they are true. So it's an issue of sort of a trade-off. So when you put on one part of the balance, so inflation, price hikes, whether it will be imported or locally originated. On the other side, economic growth and as a result, employment. So I would say that in this case, 2022 showed that it was reasonably good for economic of Uzbekistan, and all these external shocks, post-pandemic, other changes, so global and regional ones, been overcame in how to say, in seems that proper manner. There have been number of decisions concerning, for example, this interest rate hikes, and it was in time, and it seems that further decisions on slightly easing monetary policy to concentrate on more on outcomes of this global instability, issues related to the logistical difficulties which appear, and as almost all my colleagues told, that logistics for Uzbekistan somehow is one of the key issues. Transportation, so distance from some financial centers, industrial centers, being a doubly landlocked country, and I think exactly saying, so my personal opinion is that there should not be such kind of policy which orient to, for example, to decrease inflation to zero at any price just for this result. So inflation is one of the targets which government usually puts in implementation its policies. And our previous experience showed that if inflation should be curbed through the worsening economic situation or economic growth, just for in case of stability, I would say, no way. Let inflation to be as it might be.
I get it. I think the issue is when core inflation moves the way it has, it's difficult. I mean, when you think of all the products, in the cost of a final good, the commodity piece is maybe 10%. You know, a car, or this labor, and therefore wages and rent, owner equivalent rent. You know, when you look at the cost of the final cost of the good, but when it's a certain commodity, and by definition a commodity, you just substitute it, it's a commodity. But in core inflation, energy and that has storage requirements and logistics usually is about maybe 25, 30% of the cost of that final good. It's a significant component. So when the commodity goes up and logistics costs go up, you have a problem. So I do understand that. So we have a sense that inflation is a real continuing issue. I wanted to spend some time on how the banks are positioned in Uzbekistan. What's on the banks' books? You know, banks are the predominant credit transmission mechanism. You know, the non-bank market, there may be many companies, but the volumes seem very low. There's pretty much no corporate bond market. The banks are where credit is created. And maybe we pause here and we hand the floor to Mr. Hamrayev to present on the central bank, and we can come back to the bank balance sheets in Uzbekistan. How healthy are they? You know, where are they positioned? What's the maturity profile? What is the obligor profile? And are they really acting as a credit transmission mechanism prudently? And is employment, you know, near enough to full? And are margins fat enough to allow you to be less restrictive on monetary policy? So it's really going to imply a view on, is monetary policy too restrictive in Uzbekistan today? Your real rate is high. In the US, the real rate is negative, significantly. And not too long ago, it was very significantly negative. That should usually promote consumption and borrowing to fund capex, but it didn't so much. Here, the question is if monetary policy is restrictive. So I think with that, we hand the floor off to Mr. Hamrayev to present on the central bank, its mandate, and its role as not just in your market operations, but as the regulator of the banking system and their prudent underwriting and what the bank position, you know, you own most of the banks, the government owns most of the banks, they are the market, how are they positioned?
Thank you very much, Alfredo. Let me say something about previous question about inflation. We know inflation is very high, the increase right now in the advanced countries, but Uzbekistan, we should recognize rate of inflation is around 2%, because end of the 2021 inflation was 10%, and last year it reached a peak 12.3%. It's little shift, 2 percentage point shift. I should say this joint and very comprehensive work of government. Government had done a lot of work to anchor of inflation, and because I agree with previous speakers, they say about the role of how could we anchor or monitor the inflation, because it's from outside, it's import inflation, but government of Uzbekistan had done a lot of job, very excellent. Right now, inflation is around 11.7%. It's relatively low. Last year, and step by step, it will decrease up to 5% end of the next year. What about mandate of central bank? Of course, our mandate was announced explicitly, that is included central bank law to ensure stability of price, banking, and payment system in Uzbekistan. And however, during and after the pandemic, CBU tries to implement balanced monetary policy and balance the objectives of ensuring price stability with the recovery of economic activity. And as the economy is fully recovered now, price stability is remaining a single core mandate of central bank. Central Bank of Uzbekistan started active monetary inflation targeting regime from 2020, and we're providing liquidity operations and open market operations in the market. We're trying to focus more short-term liquidity and to regulate short-term through regulate short-term to affect the longer-term interest rate and inflation in the country. As you mentioned, previous question, the international inflation sharp, very huge, and it will of course affect the Uzbek economy. Of course, directly through the from goods market like import of goods, others, also through financial market. Because last 5 years, from 2017 up to 2022, Uzbek banks attracted a lot of source from abroad. It was because, as you said, policy rate in Fed and international market, it was very low, and banks attracted each year at least $5 and $6 billion per year average. But right now, policy interest rates in international market significantly high. So it will create such kind of additional burden for Uzbek banking system, whole financial system. But I think our banks will more focus to attract sources from internal market, from household deposit and legal entities deposits. So, as I said, last 5 years, it was big economic and investment activity in the country. Nominal GDP increased almost 2 times, and balance sheet of commercial banks, if I am not mistaken, increased almost 2 times, because end of 2016, the bank assets to GDP ratio, it was 33%, end of 2022, it reached to 63%. And from them, 72% of directly loans from asset of commercial bank. Relatively high growth indicators in the composition of asset were absorbed loans in abroad and investment in cash. In terms of the ratio of bank liabilities to GDP has also increased by 1.8 times. And there has been an increase in external debt, centralized sources, government. In 2018-2020, the price of sources in the, as I mentioned before, global market, it was very low. So banks enjoying attract money from abroad. We should recognize this transfer period right now because tightening condition in the external market, it will push the commercial banks focus more internal market. So I think internal local markets enough liquidity, but we should keep relative tight monetary policy as a central bank. It will give chance to banks attract more deposits. For example, last 2 years, household deposit, saving deposit of household in the banking system, it's increased average 1.6 times per year. It's very good result. It's a result of it's due to the high real interest rate. As you mentioned, Alfredo, our policy rate is 14%. Inflation is 11.7, and deposit rates average in the household deposit average 20%, and loan deposits for legal entities around 23%. Real interest is very high, but again, there are several reasons, as I said before. First of all, high investment activity. Because 20 years, 25 years, up to 2017, there was very limited access to financing. After the liberalization and reforms, everyone have a chance to do business, and a lot of demand for financing. Second reason, I think, lack of capital market. Mr. Otabek Nazarov now, he was former director of this agency. Our capital market is very beginning stage of developing. That's why all financing burden come from bond market to commercial banking system. I think why is interest rates high? It's high real interest rates. It is related with high historical high inflation environment. Last 20 years, people live at least 10%, 15% inflation, and feeling of inflation in the economy is very high. So we need time, stable time, at least 3 year, 5 year, 10 year, stable inflation, stable exchange rate. That give us more chance decreasing of real interest of economy. Let me stop here, and if you have any question, I'm ready to answer.
Sure. Well, we could maybe look at the bank market. You know, how are the banks positioned in terms of on the asset side of the books? Is there an issue with bank access? You know, spreads seem to be very high. If you're lending at 24, that's a net margin of 1,000 basis points. Is that indicative of the expected loss and low recovery, or is it indicative of a lack of banking access to the economic actor? So, how are the banks positioned on the asset side? If you look at the term structure where you have excess deposits, I'm imagining there's a lot of liquidity in the system. Real rates will cause high balances. As you go out the curve into the 2 to 5 year, where commercial and industrial loans are made, and out further where you get consumer secured type residential, et cetera. How are the banks, where are they lending? Consumer credit growth looks like it's been going up pretty substantially. Is that how the bank portfolios are positioned, or is that a new phenomenon?
Thank you, Alfred. A very good question. As I told previous my speech, banking asset portfolio increased at least 1.4 times each year last 5 years. It's very huge growth. Every year, 50%, 40% growth of loans. Only excepted 2021. There was some stabilization. Loan growth to economy, it was same level with nominal GDP growth, but after the starting 2022, started again huge loan growth. But starting from second half 2022 and past 4 months of current year, retail loans increased 1.5, 1.8 times. It's depending of type of loans. For example, consumer loan for individuals like purchasing of car, or loans for some technology goods, or loans for mortgage increased very sharply because in the economy have huge demand. Also, government also provided some special program for mortgage loan program. To some part of interest is compensated by the government, and also this is also one source for increasing of loans. What about the quality of portfolio commercial banks? Right now it's very good. NPL level is around less than 4%. It reached peak 6.2% end of the August of 2021 after the pandemic. But joint measures taken by the government and central bank, right now NPL level is less than 4%. it goes acceleration. I think consumer loans will continue increase. Might be Mr. Shahroukh Hakim will add he's from private bank and banks enjoying to do the retail loans. But as a central bank, we are worried about the debt burden of household. We try to keep some such kind of balanced prudential policy, macroprudential policy due to the debt ratio of household or due to maturity of loans. Of course, mortgage loans, 15 years, 20 years is longer, but some of loans like purchasing car or some furniture loan, it's very short, 3 years maturity and 1 year maturity, something, and interest rates around 25 up to 30%. So we're thinking about how could we regulate this situation because, as you say, right now, the income of population, nominal income of population every year increased average 20%. It's good time, but if something will happen in the economy for Uzbekistan or internal, external shocks, it might be negatively affect the balance sheet of commercial banks also.
Right. And then, well, maybe we go to Mr. Hamikov. You have a bank, you can speak for your own bank. How's the bank positioned in terms of where is it extending credit? Where is leverage building up? On the asset side of the bank, are you excess reserves? Do you buy government paper because you earn a fair return, or on low capital, or have you been extending credit? I mean, you can earn upwards of 10, 15% spread. Why such a wide spread? Is it indicative of expected loss?
I see. So I would say that just in recent years, there have been certain steps taken by the central bank. I'll a little bit add up to Mr. Hamraev's information. So concerning the securities market, actually last 4 or 5 years was years for revival of our government securities market, because 5 or 6 years ago it just went to zero, absolutely disappeared. So there was a sort of at that time it was more like a policy decision saying government securities are necessary not just because government needs money. Other types of borrowings, especially taking possibility of access to credit lines of international financial institutions and others, were being much more cheaper. But there was a necessity to develop domestic bond market, government bonds market, and Ministry of Finance and the Central Bank has taken a decision to gradually expand, develop, introduce new products, new tenors to this market, saying in the future it will become an instrument of monetary policy. Seems future is gradually coming. So because market is now existing, and if we will say that unlike situation like, for example, 5 or 6 years ago, when banks just, I would say, accumulated liquidity on their correspondent accounts with the central bank, earning no money and keeping that all this vast amount of liquidity just to meet prudential requirements. Now we have substantial change. So we may operate with our short-term liquidity. We have instruments, both instruments for investment and getting some return on that, and instruments of, for example, short-term regulation of liquidity through the short-term borrowings. And if I would say not only about just exactly Tenge Bank, overall banking system, I've been just following the situation with the indicators of the banking system and find out two interesting things.
And sorry, say it again?
Huh?
The last thing you said, sorry.
I just find out a couple of interesting statistics about the banking sector. By the results of 2022, have been very interesting thing. Usually the fastest growing item of assets of commercial banks were lending. It's still the largest part of the assets are still on the loan portfolios of the banks. But at the same time, I find out that investments into the securities by the banks last year had a growth of 3 times higher than, for example, growth of the loan portfolio. It means that there is another market where financial institutions are becoming like participants and players on this market is emerging. Concerning other parts of this market, so securities market, corporate securities, especially corporate bonds, it's still somewhere in the future. It's still under quite an underdeveloped situation. And another interesting statistic, last year there was a serious how to say, result achieved by the banking sector. I say it's a result. Why? On the liability side, there have been always 2 large sources. And Uzbekistan, a little bit unlikely other countries, so I would say first source is so public deposits from physical entities, from legal entities, so customer deposits. And the second one was a borrowing. Borrowings generally from abroad, from IFIs, from foreign banks, from investment.
In hard currency?
Majorly in hard currency.
Okay.
And I find out that 2022 was something like a sort, I would not say revolutionary, but quite a like break-even year when overall amount of deposits on balance sheets of the banks became more larger than borrowings from abroad. For many, many years, just in 2022, it's happened in such kind of situation. However, we are still borrowing, banks are still borrowing from abroad, attracting deposits, credit lines, and this item is growing. But the most important thing that just last year, for example, population deposits increased 40%. Just comparing to other items of the balance sheet, quite substantial. For 21, 22, figures of 40% are quite impressive. And I find out that's quite important issue that banks are gradually moving to the gaining trust of economy, of population, of entrepreneurs. Money is coming to banks, which is quite important trend, and this trend, if it will continue, will be very important for further development of the banking sector.
But, well, it brings up 2 things. One, does the central bank mop up that liquidity if there's a lot of deposits? You end up excess reserve. And then the other question is that GDP, you know, there's not a surprisingly low monetization in Uzbekistan, and I'm not exactly sure why. And I'd like to maybe have you respond to that. But it seems like M2 to GDP is very low, and how does loan growth, unless it's unless maybe there's an external FX fact, a lot of FX borrowing, FX reserves, and maybe you can comment on the low monetization rate, or Mr. Hamraev, you could comment on it.
Yeah, thank you very much, Alfred. It's a very good question. It's related second time about monetization ratio. As you mentioned, M2 to GDP is very low. I think seems like this, but this like methodological issue, statistical issue. Of course, end of last year, the M2 to GDP, it was 21%. If you compare the other emerging markets, it's 50 or 60% is normal, 21 is low. But if your economy was 20%, 21% M2, how could we create like 100% of GDP? So it's in logic because if you see from asset side of commercial banks, the loans to economy is 45%. Stock of loans to economy is 45% of GDP. And there is some tricky moment, I think. It is statistical issue. Some of liabilities is not included to M2. For example, as of 1st of January 2023, banks' total liabilities to non-residents that are not included broad money was more than 17% of GDP, which is not included to M2. And liabilities to government also doesn't include GDP. It was about 9% of GDP. Here, 26% additional. If 21 plus 26, it's around 47% of GDP total liability. I think again there are very good statistics. Last 5 years during the reforms period, every year the current account balance deficit around 5 and 7% of GDP. It means trade balance was each year negative, and current account balance around 5 and 7% of GDP. It's huge money. And the sum of the part which of broad money and inflows from abroad or government, it goes to import due to the high economic and high investment activity in the economy. Then I tried to search where is money, and we found very good statistics. During 2018 and 21, the stock of real estate as well as capital formation increased by about 5 times during 5 years, last included 2018, 18, 14, and last 5 years. The real estate stock in the economy increased 5 times. So most of Uzbekistan is going like such kind of situation, transformation, government support to the economy, bankers, state-owned bank, private bank, companies try to attract money from abroad, but this money don't reflect to the balance sheet inside of broad money of economy. I think step by step this situation will normalize.
Okay. Which it's a segue to my final question, and it's on fiscal policy. We're pretty much over time, but I think it may be informative for the audience. And maybe this is directed to Antonio. I don't know. Antonio, you're showcased as a problem solver in White Shield. Do you see the fiscal policy side? I mean, we just, to summarize, I think we're coming to the conclusion that the bank's liquidity operations and monetary policy is you need to look at it in the context of the gardener and not just the garden. And it's all the other roles of the central bank and in regulating the banks and being the lender of last resort and making sure that prudent policy and credit is being put out there is probably going to have more impact than just nailing the right real rate and deciding if it's too restrictive. But when you add the fiscal side to it, and what's happening on the fiscal side, how coordinated do you think the central bank is, or do you see any problem in the banking sector with NPLs or FX exposure that you think is going to lead to a problem that they're going to have to address?
Thank you for this question, and I'm happy to be positioned as problem solver, but certainly not in the past 1.5 minutes of this panel. So let's see. In terms of issues that should be monitored in the system, there's one issue that I haven't heard explicitly mentioned, which is what you just said, the non-performing loans. Non-performing loans can be, so to a certain extent, they're totally normal and even welcome, because it means that enough risk is being taken, and therefore enough risk then will generate growth. However, they can become a cancer in the system. And the first thing that should be done in that respect is a tight monitoring. So first of all, the statistics, and be clear on which part of the debt is non-performing, and how non-performing, how bad, and then intervene as needed. And the other point, which is partly related to this one, is in the financial system is the contagion effect. Now, I'm aware that the central bank has already put in place stress tests, has already put in place policies to increase transparency, risk management, both in small bank and large banks in the country. That's great. But there is one point which I don't know if it's done, but I don't think it's done yet, which is what's the correlation between the potential failure of one bank into the rest of the system. And in that respect, we have a model at White Shield that shows that one bank failing day by day will cause the failure of other banks simply because there are cross loans amongst banks in the system. So stepping up that stress test, not only at the individual bank level, but at system level, is the key, from my perspective, to control the overall financial system. Now, the other point on fiscal policy, I don't want to get into any example because I don't think we have time for that, but when it comes to fiscal policy, reducing government expenditure, making it more efficient, great. We all know, though, around this table that the immediate effect of that will be decreasing the GDP because of aggregate consumption, including the G part of the GDP. So, but that's still great to do because it's a long-term positive strategy. The measure to solve this initial adverse effect of a tight fiscal policy is focus. Intervene on those vulnerable groups that need to be helped. Intervene with specific policies which are not only focused but also conditional to certain groups. So, two quick examples mentioned. One is subsidies for mortgages. Great, not for all, only for the needy. And second is small, medium enterprises. The policy rate of the central bank is what it is, and it's certainly justified. But there are at least some parts of these small, medium enterprises that need and deserve to be helped because they are the backbone and they will contribute to the overall growth of the country. Again, in a focused manner.
Then that's policy lending. I think, Atabek, you should have the final word. The the government owns most of the banks. Are they profit-seeking? You can't make your banking system a policy tool. What should they do with the banking system and still meet the policy objective? I mean, that's fine-tuning credit lending to sectors.
Dina, thank you. If you permit, I will step back a little bit just to recap on the theme, today's discussions. Modern monetary policy, full employment, stable prices, and economic growth. If you read Uzbekistan's constitution, today's version, and you look for chapters that describe, let's say, obligations or powers of the government, the cabinet of ministers, and of the central bank, you will read that the monetary policy objective and responsibility lies with the cabinet of ministers. There's nothing about that in central banking mandate. The new version of the Constitution that has been proposed for voting changes that. And there is a bigger chapter on central bank and its powers. So the central bank will have a constitutional obligation to promote monetary policy. Now, the second question is, how do we define monetary policy? What is monetary policy? And when I read the current law on central bank and its policy objectives, I don't see anywhere reference to employment. We talked about stable prices, we talked about the stability of the banking system and the payment system, but there is nothing about employment. So I think, again, my recommendation going forward, and I will continue to push that through my own channels of communication, is that either in the Constitution there should be explicit definition of what is monetary policy. Is central bank responsible for creating jobs or for creating full employment? Because as we know, look at the, for example, United States. First thing markets look at, what is the job market is like? How is the unemployment going? Are we creating enough sustainable jobs in the economy? Do we care about that? So I would hope that if we talk about monetary policy going forward, Uzbekistan's monetary policy would also include that as it's one of the key primarily objectives. Because yes, inflation is absolutely paramount. Maintaining stable prices is important, but I think where I talked about at the beginning of my conversation, where it is central bank has tools, is through obviously controlling, influencing the exchange rate, right? So central bank is the biggest player in the exchange rate market, and if you see last 5 years, the development or the, let's say, deflation of the exchange rate and the inflation, they're very similar if you look at the average. Kind of talking about your question, why banks asking such a huge premium on the interest, right? I think what you see there is a hedge against devaluation. That's why if you look at the spread on dollar-denominated deposits versus loans and SOM-denominated, spreads for SOMs are bigger. That's because of the hedge against inflation. So from the standpoint, again, I hope this constitutional reform will, the changes to the chapters will be important, and the central bank will have a full mandate and hopefully a larger mandate to go ahead with the monetary policy, and not only focusing on stable prices and the stable exchange rate, but actually creating full employment in the economy. And what kind of jobs is the banking sector creating? Obviously, the monetary policy impacts on investment activity, right? So we work a lot with the companies, and we see more and more that investing into production sector, into manufacturing sector, is becoming very, very difficult because it requires longer capital, and the margins that you can generate in manufacturing are not as, let's say, profitable as you would do, for example, if you invest in trading activity. And if you trade, you take less risk, your obligations are shorter. So what it does, if we are unable to provide long-term capital in the Uzbek economy, we will not be able to promote industrialization, which we need on the policy level. So I would hope that we'll find a way, as my colleague have mentioned, we work together to try to create sustainable capital markets in Uzbekistan. Although it was an easy task because it requires coordination and consolidation of a lot of players in one. But central bank could going forward be the go-to institution that will also look into facilitating financial markets, because you need a strong player like a mega regulator who will take this under one umbrella and facilitate, let's say, what do we call it, a distribution of capital, more efficient distribution of capital. Talking about the banking sector and the state role in the, let's say, in the economy in general, I'm pro very little government, to be honest, including mostly in business. I think government should be active in social sectors like promoting education, investing in education, in social healthcare. But when it comes to managing state assets, I think government should be as far as possible. And because private sector is best positioned to efficiently operate for profit. So that's my view. Thank you.
Thank you very much. I think that's way over time. I apologize, but I do hope this was informative panel discussion for everybody. We learned there's more to policy than just open market operations, and it's a complex subject, and I hope at least it was informative for everybody. So I'd like to thank everyone, and please enjoy the rest of the conference.